fundsupermart.com.
With us today is Sunil Asnani, Portfolio Manager at Matthews International Capital Management, to share with us his views on the Indian market. Hello Sunil, thanks for joining us. The Indian market had a good run in 2012, outpacing the broader Asian region. So what's your general outlook for the market this year, and what are the growth drivers?
Sure. If you ask me how much I can predict the short run, I would be a loss of words. I would say that last year the run was because a lot of expectations were built in that a lot of reforms will take place, and to the extent the government and the leadership is able to continue with those reforms, especially which can propel investment in the economy, the markets will take it in their positive manner. If you take a longer term outlook, I think the market should follow earnings growth, which should be in line with the nominal GDP growth of the country.
Okay, so which sectors are you more in favor of?
Well, as you would know, we are bottom up investors. We don't really take sectoral calls. But that said, I would say the companies which have good pricing power, who are more in B2C segment, and they are able to deal better with policy and inflationary hurdles, they are better off. But honestly, in every sector you will find companies with good entrepreneurs and good managers who are able to deal with different policy hurdles. So it is across sectors, but more in sectors with pricing power and brand equity.
As you have mentioned earlier, it seems like high inflation always casts a shadow on India's economy. So do you see it moderating in the near future?
First of all, if you look at the inflation over the last 4 decades, it has always been present. And despite that, the financial markets and the economy have been growing. So even though it is a hurdle, it is not insurmountable. Secondly, a lot of the inflation is because of lack of investments, especially in agriculture and infrastructure. As and when that happens, there will be moderation in the inflation. However, this will not happen in the next 12 months. This may happen over a medium to a longer term. In the short run, inflation can moderate for reasons like base effect, because last year the inflation was high, or it could moderate because of a correction in oil prices, where India is dependent on the world. But I don't think those factors are in the control of India, and the longer term inflationary pressures can abate only with more investments.
Okay, finally, how is your portfolio positioned in view of the current markets, and what's your investment philosophy and strategies?
Yeah, our philosophy is to take advantage of the growth in household income over time, because this income growth is secular and relatively independent from what's happening in other parts of the world. And to do that, we aim to find out the entrepreneurs, and we are not only focused on growth, but also quite pragmatic in their approach. And that is why our portfolio is more heavily weighted in small and mid cap companies, which have demonstrated the potential to become big, maybe not in the next 1 year, but over a longer period. And our portfolio is also geared to benefit from rise in investment spend, because this is one area where I think India needs to grow, and our aim is to find companies which can benefit without actually affecting their cash flows.